The Auditor-General provides assurance to Parliament on the accountability and performance of the Victorian public sector. The Auditor-General conducts financial audits and performance audits and reports on the results of these audits to Parliament. On the 27th of May 2015, the Auditor-General tabled his financial audit report, Universities 2014 Audit Snapshot. This report focuses on the university sector, discussing issues arising from our audits of the 2014 financial year for the 8 Victorian universities and the 51 entities they controlled. The key findings of this report are 3 entities, including 2 universities, received qualified financial audit opinions relating to their treatment of Commonwealth grant funding. This is a long-standing issue. While universities generally have a low financial sustainability risk, longer-term issues are starting to emerge regarding the funding of new assets and asset renewal that require monitoring. And policies and procedures to guide travel and accommodation expenditure are not comprehensive and not always adhered to. The report identifies and discusses the key issues within the university sector that arose during our financial audits for the 2014 financial year. As well as assessing the financial outcome and financial sustainability risks for the sector, the report also reviews the frameworks and policies in place for managing travel and accommodation expenditure across the 8 universities during the 2014 financial year. Qualified audit opinions were issued on the financial statements for the year ending 31 December 2014 for the following entities: Deakin University, the University of Melbourne, and the Australian National Academy of Music Limited. All of these entities received a qualified audit opinion because their treatment of Commonwealth Government funding during the financial year was not in accordance with Australian accounting standards. This is a long-standing issue against which there has been no progress. This is the 8th year Deakin University has received a qualified audit opinion on this issue, and the 9th year for the University of Melbourne. In conducting financial audits, we review the financial reporting internal controls and, through interim and final management letters, report any weaknesses identified to management and the audit committee. During the 2014 audits, we raised 44 high and medium risk issues, of which over 60% related to the IT control environment. Unfortunately, universities have not adequately responded to issues raised through management letters arising from our 2013 financial audits, with 40% of prior period high and medium risk rated issues still unresolved. For the financial year ending 31 December 2014, the university sector generated a combined net surplus of $537.1 million after taking into account audit adjustments arising from the 3 qualified financial statements discussed earlier, building on strong surpluses generated over the past 5 years. This is shown in the graph. This surplus includes $232.8 million of investment gains realised by Monash University and the University of Melbourne as a result of investment portfolio restructures. This slide shows where a university gets its money from, and this pie chart has not changed significantly over the past 5 years. Government grants make up 53.9% of university revenue, most of which is received from the Commonwealth Government. The pie chart demonstrates how reliant universities are on this source of funding. Any changes in government funding will have a direct impact on university finances. More investment revenue was received in 2014 relating to the investment gains discussed in the previous slide. To be financially sustainable, universities should aim to generate sufficient revenue from operations to meet their financial obligations and to fund asset replacement and asset acquisitions. Our analysis shows that the university sector has generally low financial sustainability risks, driven by strong year-on-year surpluses and largely good liquidity results. This indicates that the sector has no financial sustainability risks in the short term. However, we have identified that longer-term risks are emerging, with all universities rating high or medium risks for their self-financing indicator. This suggests they are not generating enough cash to replace or renew assets. Coupled with this, the capital replacement indicator results have fallen significantly over the past few years across the sector, with universities spending less on their assets. Over time, the cumulative effect of underspending on asset renewal or replacement could result in assets not being fit for purpose. Each year, we conduct a focused review over an area of governance or internal control within a sector. In 2014, our focus at universities was on travel and accommodation. In 2014, the 8 universities spent $137 million on travel and accommodation. As public bodies, universities should be able to demonstrate that value for money has been attained by any travel undertaken, both to the university itself and to the public in general. While we observed that universities had policies and procedures in place to guide travel and accommodation expenditure, they were neither comprehensive nor always followed. In summary, the report made 5 recommendations, which are listed on the next 2 slides. The department accepted all recommendations and has provided a detailed outline of how it intends to address each recommendation and by when it intends to achieve these actions. This is contained in Appendix F of the report. The Auditor-General will monitor this progress over time. To summarise, our key messages are: Parliament can have confidence in the financial reporting of universities except for the 3 entities who receive qualifications. Long-term financial sustainability risks are emerging that need to be monitored. And frameworks to control travel and accommodation expenditure are in place but are not comprehensive and compliance is poor. All our reports are available on our website. If you have any questions about this or other reports, or if you have anything else you would like to discuss with us, including ideas for future audit topics, please call us on 03 8601 7000 or contact us via our website.